Hello and good evening, everybody. Welcome to tonight's session on Amplify Your Trading Results with CFD. So we'll later explain to you guys, if you do not know about CFDs, then will give you an idea how you can actually boost your capital to make even more from the markets if you're trading CFD. And now CFDs are also available for the Malaysian stock market for Bursa Malaysian shares. And actually tonight with us, we have Anne from 𝐀𝐦𝐻𝐿𝐲, who will also be presenting later on how you could actually see more details on CFDs, because she's from the broker herself. And therefore, she'll be able to answer your questions later on as well. So I'm just going to share with you basically the mechanics of CFDs, what it's all about, and how does it help us as traders and investors in the market. This is in fact the first part of a two-part series. Okay, later we will also share with you guys where you can join the second part if you guys are interested in going into CFDs. All right, so before I start, can I just have a yes from you guys if you are able to hear me? And 𝐀𝐦𝐻𝐿𝐲𝐿𝐲, welcome. Okay, thank you, Anne. Thank you, San Kevin. Okay. All right, looks like we are all set to go, right? And I hope that today's webinar will be able to give you an understanding about CFDs. And I know that we also want to take a look at, the different type of CFDs available, because you probably have also heard from advertisements, or even from the newspapers, or even from social media about CFDs, right? And what's the difference between trading market or direct market access from an over-the-counter CFD platforms, right? So to give you an idea and what are the risks involved as well. All right. So I'll go through a presentation. Probably it's going to take me about 20 to 30 minutes, and then Anne will come in and also share with you guys in more details about the CFDs that CGS, CIMB futures are able to offer you guys. All right. Now, before we start, whatever that we being shared here today is for educational purposes only. It's not intended as any investment advice. So if you do want to look for investment advice, please do look for a licensed investment advisor. All right. Now, so what is CFD? Yeah, so CFD is actually a short form for contract for difference. So it's basically a contract between two parties in exchange. At the close of the contract, the difference between the opening price when you open the contract and the closing price of the contract, and the difference is where you make your profits or your loss. Okay, and of course, it's multiplied by the number of shares specified in the contract. I'll give you more details later on and what it's all about also. Is it the same like trading a share? It is exactly like trading a shares, but the big difference is, instead of putting all your money into shares, if you want to buy, for example, 100,000 ringgit worth of shares, you have to fork out 100,000 ringgit and trade those shares. All right, but for contract for difference, you only need to put a deposit, like buying a property, right? So there are two parties involved here. You can actually go into a long, which means that you're expecting the price to go up, and then you buy a CFD, or you go long a CFD. At the same time, you can also go short. If you think that the prices are going to go down, you can go short. So the CFD platform provides you an opportunity to also go and short the market, short the counter, if you think that the price is going to go down. So you can make money both ways. Instead of traditionally, if you're investing in the stock market, you can only make money when the price goes up in one direction, right? And in CFDs, you can have different margin flexibilities, right? Meaning margin means, you remember I mentioned to you about the deposit that you put in, all right? So some of the products or investment asset, you can go as low as 5% of the value. That means, for example, let's say you want to trade $100,000 worth of that, whether it's an index or whether it's a share. Let's say you want to trade $100,000. You don't need to, deposit $100,000 into CFDs. And let's say that CFD allows you to trade with a 5% margin. That means you only need to put 5% of the $100,000, which is $5,000. So you put in $5,000 as minimum, then that $5,000 margin allows you to trade $100,000 worth of stocks. All right. Or if let's say the margin is 10%, okay, means that if it's $100,000 worth of the value that you are trading that particular asset, if it's 100,000 and it's 10% margin, that means you only need to put in $10,000. Okay, so that $10,000 gives you a 10 times leverage. All right. So if it's 5% margin, it gives you a 20 times leverage. All right. So we go into examples later on now. Okay. So how do margin works? Okay. Like I said, I'm just going to give you a perspective of a trader. What would you expect if you are trading the CFD? And again, later N from CGS CIMB futures will share with you in more details for CFDs. All right. So let's say you have $10,000 in your account. Okay. So you fund and you put $10,000 into your CFD account, and you want to open a trade worth $5,000. That means you want to buy a stock, let's say, worth $5,000. And because let's say the margin required to trade this stock in the CFD is only 10%, that means you only need to put in $500 to trade or to open a $5,000 trade. All right. So remember, you have $10,000, right? And you want to trade $5,000 worth of stocks. You only need to use $500 out of the $10,000 that you have. So that means you can allocate the $500 to actually buy $5,000 worth of stocks, and you still have the $9,500 left, and you can use it for other stocks that you want to trade as well. All right. And then of course, that's when you open a trade, and when you close a trade is, you know, your whatever the balance that you have in your account, you will minus your profit or loss. And of course, the margin will be returned back to your account value. Okay, so I'll give you an example later on so that you have an idea when you go short or long. Okay, so this is how it's being calculated, right? So 9,005 was your account value, but because you use $500 margin, but now you close your position, that $500 will go back to your account value plus and minus your profit or loss. All right. Now, the difference, right, between physical stocks is, of course, in stocks. One of it is you don't need to put in the full value to invest or trade those particular stocks. You only need to put a deposit. That's number one. All right. You don't need to put all your money in. Number two, you can go long or short. That means if you think that the price is going to go up, then you can go long, which is like buying. Or if you think that the price is going to go down, then you go short. All right. And so this allows you to have an opportunity to profit from falling markets. Okay, so let's say the price is going down, and if you do not know what to do, you can actually go short. And you can also use this actually to hedge against your investing portfolio for stocks. Right? Because if let's say you're buying a stock for long term, or let's say $100,000 worth of Maybank shares, okay, $100,000 worth of Maybank shares, and the prices started to come down, and you do not want to sell Maybank shares because you're holding it for long term, right? And what you can do is you can actually short $100,000 worth of Maybank shares, and if the margin is only 10%, you don't need to have $100,000 to go short on your CFD for Maybank. You just need $10,000. It's just 10% of 10% of the value. All right, then that allows you to go short. So what's going to happen is this, right? So if let's say you bought Maybank shares, let's say the current value that you have for Maybank is $100,000, and let's say the price came down 10%, right? So if the price came down 10%, then the value of your portfolio, the cash portfolio that you have, will go down $10,000. Now the value becomes $90,000. Okay, so the value of your stock portfolio came down, but because you short Maybank, equivalent amount, $100,000, and the price came down, all right, and because you went short, you make $10,000 from your CFDs. Okay, so that will offset your losses on your stock portfolio. All right, so this is one way you can also use CFDs to actually manage your risk when market comes down. Okay, and now that we have Malaysian CFDs, Malaysian stock CFDs, this will give you an opportunity to have a hedging strategy for your stock portfolio. So as an owner of a CFD, if let's say you buy a Maybank CFD, let's say, right, it's an equity CFD or stock CFD, whatever dividends that the company receive, like say Maybank, give you a 3% dividend. That 3% dividend you will not get the dividend if you're buying CFDs, all right? But what you get is basically that 3% will be reflected on the price of the CFDs. Okay, so everything will be reflected on the price. You don't receive dividends like a physical stock. Okay, and of course, as if you buy a stock, a CFD, an equity CFD, let's say a Maybank CFD, then it does not entitle you to any voting rights. Okay, because you don't really hold or you don't really own that share. Okay, it's basically it's just a contract. Number 4 is transparent pricing. Okay, the direct market access system right now that we have is the same pricing and liquidity as stock trading. So whatever you see, the prices on Maybank, for example, that is trading, you will see the same prices trading on the CFD direct market access platform as well. Okay, now this is very important because if you are trading in an unregulated CFDs, that means CFDs that are not regulated in Bursa Malaysia, the company that provides that CFD can actually play around with the prices. It does not reflect the real movement of the stock market or any markets that they are trading. Okay, so sometimes they can actually manipulate those prices. Okay, but if you're trading with a regulated market like what CGS CIMB futures is providing, then of course it's transparent. Okay, it basically just follows the cash market or the equity market prices. All right, so these are some of the difference. I'm not going to go through the details of what is direct market access. It's basically the same thing like trading shares in the stock market. Like, all right, it's not like the market maker model, CFD model that a lot of other companies are providing, which are normally unregulated in Malaysia. Okay, so these companies can be in like British Virgin Islands or Cyprus or any other countries. Okay, so they are market maker means again, the prices may not reflect the same prices in the exchange that the stock is trading. All right, and of course, it's up to the market maker as well to give you different kind of spreads in the market because they are the one in control. Okay, whereas in the direct market access, it gives you exactly what you see on the cash market or on the exchange. All right, on the real market exchange. So these are some of the features. Like I say, if you have any questions, later on you can just type in those questions, and if I'm unable to answer them, and later we'll be able to answer those questions. All right. Now the other good thing about CFD is it does not have expiry. That means you can hold as long as you want until you close the position. Okay, so if you think that the reason why we trade warrants, okay, to get the additional leverage, but warrants have expiry. Warrants, you can't hold it forever, right? Not like CFDs. But the only difference is this, right? CFD, there is a cost to holding that CFD, which I later gonna explain. Okay, so it is called the CFD Overnight Financing. That means it's rollover on a daily basis. So if you buy a CFD, a stock CFD, for example, worth $100,000, and you decided to hold it the next day, all right? So that one day, you'll be charged an interest. All right. So how does this interest is being calculated? Is this? So the overnight financing is basically your number of shares that you buy, which is the quantity, multiplied by the share price, the mark-to-market price, multiplied by the effective rate. All right. And it's because it is prorated on the number of days, because normally effective rates or interest rates are given on a annually, right? It's a interest for 1 year, so we divide them into days because we are the interest will be charged on the daily basis. All right, so this is an example. If let's say you are looking at the US markets and markets that are settled in US dollars, the number of days in a year is 360. All right, so you take the percentage, you divide by 360, that's your daily rate. Okay. So the number of days is being calculated like this. Okay, let me go through the effective rate first, right? So the effective rate is basically if you are going long. So if you go long and you go short, the rate is different. All right. If you go long, you take the financing rate, okay, plus the base rate. Okay, so what is financing rate? Financing rate is basically the rate that's provided by the broker. Okay, for example, if it's CIMB, CGS CIMB later on, you can ask what kind of financing rate they're actually offering. Okay, and it's normally like the rates that's given by the banks lah. Okay, so plus BR. BR is basically the benchmark rate for the markets. Okay, for example, the benchmark could be for Malaysia. Normally, we use the KL Interbank offering rate, which is 𝐀𝐦𝐻𝐿. All right, and other markets they will use different rates depending on that particular market. Okay, so we have so for long positions, you take the effective rate provided by the broker plus the financing rate, plus the base rate. Okay, for example, 𝐀𝐻𝐿. Okay, which I later show you the calculation. For short positions, you take the financing rate minus the base rate. Okay, and we all know that the base rate is currently very low, right? The interest rates currently are very low over across. So it's good to have this as a trading instrument, because this your cost of actually acquiring CFDs or buying CFDs is very low. Okay, so short position, financing rate minus the base rate. In case where the base rate is actually higher than the financing rate, actually the broker have to actually pay you the difference. Now they will pay you for actually going to a short position. Okay, but of course now the base rate is very, very low. I'll show you an example in a short while. All right. So the number of calculators days is calculated like this: Monday to Friday, from Monday, Tuesday, Wednesday, Thursday, Friday is all calculated as one day. But markets are closed on Saturday and Sunday, right? So from Friday to Monday is calculated as 3 days. Okay, so the interest calculation is based on 3 days. All right. So this is how it looks like. But later I'll show you an example how much is charged normally. Okay. So let's say you are you're going long, right? $1,000 worth of 𝐀𝐦𝐻𝐿 shares, 1,000 shares. All right, and that share is basically $10, for example. Okay, $10 price from day 1 to day 2. So you're holding it from today until tomorrow. Okay, so let's say the base rate today is 1.93%, for example, like 𝐀𝐻𝐿. Okay, and the financing rate provided by the broker, for example, like CGS CIMB, they provide 3.75. So your financing rate for the year, for 1 year, is 3.75. Remember, you are in a long position. So you plus the financing rate of 1.93. That means your effective rate to actually go long for CFD for a year is 5.68%. All right. So the number of days is 1 because you only hold 1 day. And here we are looking at 365. For example, let's say we're looking at the Malaysian market is divided by 365. So 1,000 shares multiplied by the share price at $10. You multiply by, okay, this is not 4.98. This is actually 5.68. You divide by 3.65. It becomes about $1 a day. All right, depending on the value of or the mark-to-market price of the particular share. So this calculation here is actually 5.68. I think I forgot to change over here for short position. All right. So the amount is actually quite minimal on a daily basis, because remember the 5.68% is calculated on a yearly basis, right? So you divide it by 365, that's you get the daily effective rate. Yeah, so short is again a little bit different. So if we take, for example, the base rate is 1.93%. Now you're going short, right? And your financing rate is 3.75%. So you take 3.75 minus 1.93, your effective rate is only 1.82%. So it's basically cheaper to actually go short. All right. So if you look at this, if you do the calculation, you get your financing rate per day is only about 50 cents instead of the 1 ringgit and 50 cents if you are going long on that particular stock. Okay, so this is basically how it's being calculated. Okay, so what instruments can you trade, right? This is basically offered by CGS CIMB. So if you want to trade US stocks, again, not all stocks are tradable. Okay, there are, if you go to CGS CIMB or you go to iTrade CIMB website, they will provide you a list of US stocks that you can trade using CFDs. All right, so you have US stocks, you have China stocks, you have, so you're going to go, directly to China. And if you all know that we can't trade China shares, right? So you can trade China CFDs, Australian stocks, Hong Kong stocks, Singapore stocks, and now just recently, I think CGS CIMB has just provided CFDs for Malaysia stocks as well. So by having one platform, CFDs, you're able to have access to many different markets. through one platform, right? Unlike if you are trading shares, if you want to trade, for example, you open a Malaysian broking account, trading account. If you want to trade US shares, then you have to open a foreign trading account, right? To trade US shares, trade China shares, and you have to open an account, and so on and so forth. But this year is where you only have one trading account, a CFD account. Let's say with CGS CIMB futures, you can have access to all of these, right? And not only that, you can trade stocks, you can also trade cash indexes. That means you want to trade Dow Jones, you want to trade the S&P 500, the Nasdaq, the Nikkei. So if you think that I can't find stocks, I do not want to find stocks, I do not know how to find stocks to trade, you can also trade those indices. All right, so most of the major market indices are available at the CGS CIMB platform, okay, which later maybe Anne can explain further if you guys have any questions. All right. Okay, let me see your questions. So KP Chin, thanks for joining us. Can I use existing CFD account for local counters or need to have a separate CFD? I think generally you only have one, but let me get Anne to answer you lah. All right. Izam is asking, hi, is the deposit only for cash or can use share collateral? No, this one have to be cash. You cannot use share collateral. All right. Again, anything, if you have any questions later on, you can ask Anne as well. All right. Okay, thank you so much for your questions. Now let me go on. Okay, so let me just share with you how this thing basically works, right? So let's say you are buying a US-based company, let's say ET Limited, right? It's US-based, so you are trading a US stock CFD called ET, okay? And the CFD requires a 10% margin. And let's say the current price for the stock is $2. Now, so we have both traders over here. One wants to go long, so the guy here wants to go long, and the lady here wants to go short, right? Both of them put in $10,000 worth in their account. So they set up the account and then they fund the account with $10,000. All right. So now both of them wants to trade that share, okay? But the guy actually wants to long. He wants to buy, all right, 10,000 shares. Okay. So the value, if you want to buy 10,000 shares and the current price is $2, the value is $20,000. So the value that the share that the guy wants to trade or buy is $20,000. Okay. And the $20,000 is basically the value that you want to trade, right? But you only need 10%, okay, as a margin for that $20,000, which is $2,000. So so the margin needed in your account is only $2,000. Now remember, you have $10,000, right? But you own from that $10,000, you only have to allocate $2,000 as a deposit. That means you can't use that $2,000. You can use the rest of the other $8,000 to buy, let's say, other shares or other indices if you want to. But the $2,000 is reserved as a margin because you are buying the share. Okay, so $10,000 you can here already buy $20,000 worth of this share. Okay, and of course you can trade probably another $80,000 worth of shares with the same margin. Okay, so the 10,000 basically, if you're trading, let's say, a 10% margin product, okay, allows you to actually trade a total of $100,000 worth of value of any shares or counters or cash indices that you're trading. Okay, so similarly, this lady here wants to go short, right? Same value, same amount. Okay, so margin is needed also $2,000. So now the only difference between these two traders is that the guy who go long will make money if the price goes up. Okay, and the lady who goes long will lose money if the price goes up. Okay. Similarly, if the market goes the other way around, if the price goes down, okay, the guy who go long will lose money. The lady who goes short will make money. Okay, so let me just give you an example. All right. So again, current price is $2,000, and now let's say today is Wednesday, and they decide to enter into a trade. So the guy opened a long position. Okay, use a $2,000 margin. Okay, so now he's into a contract buying long of a company called ET Limited in the US, for example. All right. So he's now in a long position for this company, okay, worth $20,000. So at the same time, this lady went short. Okay, the value is the same as well. Okay, so if you look at the account, margin is being used $2,000. So now the $8,000 can still be used to go and fund trade other shares if you want to. Okay. Now let's say at the end of Wednesday, so both of them buy, let's say, at the same time, at the same price, and now at the end of Wednesday, both of them decided to hold their stocks. They do not want to sell, right? They want to hold it to the next day. So what happens if it's $2.10, let's say the current price, right? So if you look at the current share price, so remember this guy holds 10,000 shares, okay? At $2.10, that means the value of the stock that he's holding now is $2,100. Okay, that means remember his earlier open position was 20,000, right? So now it's 21,000. So he actually make an open. He hasn't closed the position yet. So it's still an open profit and loss of $1,000. Okay. And this is the overnight margin financing, for example, 4.98%, about $3. So that $3 will be deducted from your account value. All right. So I just put here. That's why you see the account value from $8,000 went down to about 7,896. Because now the margin used is based on the value. So this is actually 10% of the value of that share price at $2.10. So because the value is now $21,000, right? So $21,000, 10% of $21,000 is $2,001. So you need to allocate the margin there. Okay, so that's why you get 7,896. So if you take these two, you add up, it's actually $10,000 minus your overnight financing of $3.05. For example, let's say the effective rate is 4.98%. Okay, and 1 over 360 because this is one day. Okay. So this guy have to actually pay $3.05 for the overnight financing. Now here the lady, okay, same thing, but because the price went up and she short the particular share, she has a short, or he has a loss or an open position loss of $1,000, right? The value of the share price because it went up 21,000, right? Remember the initial capital was 20,000 and now it went up 21,000. But because she goes short, so you have to multiply -1. You're going opposite, right? So this one here, the margin financing is only 160 because remember, if you go short, it's the effective rate is lower. All right, the financing rate is lower. Now let's go on. So at the end of Thursday, both of them decided. So Thursday, so they leave it, and on Thursday the price continued to increase. Now. From $2.10 on Wednesday, it is now closed. It closed at $2.30. All right, $2.30. So what happened here is the value of the stock is now $23,000, right? Okay, 2.3 multiplied the 10,000 shares that this guy have, so 2,003. So now he has an open profit of $3,000. Okay. And because the value is 2,003, now the margin is being used currently is 10% of 23,000, so that will be $2,300. And again, if you hold it overnight, okay, if you hold it overnight position again, then you're going to be charged with another financing rate of 3.2%. Okay, so the lady, because he went short, right, and the price went up to $2.30, so he lose $3,000. So she has a loss of $3,000 or open position loss of $3,000. All right. Now let's go on. So this is end of Thursday. So both of them hold the position, and that's the reason why they are being charged the overnight financing, because they hold it. When the market closed, they did not sell the position or did not close the position. Okay. Now, so let me see. I think Wing Ki is asking, would there be a margin call, right? Now, of course, if your profit profit is okay lah, we won't get a margin call. If you are a loss position, right? So if your loss position is more than your account value, right, then you have to top up. All right. For now, let's say, for example, this lady here only have a $3,000 loss, right? Her account value is still about 7,696. So she won't get a margin call. Okay. If she has $2,000 only in your account, then she have to top up $1,000. Right? Because if she does not top up, then she'll be forced to close her position. All right. So one of the things that we have to do is we have to make sure that the account, the money that you have in the account is enough to buffer the volatility. Okay. So let's take a look at, so Thursday they hold, and now it's Friday. Okay, so Friday in the morning, let's say the guy decided to take their profits. I think it's enough. All right. He wants to close the position at $2.40. So if he closed at $2.40, that means the value that when he closed the position is $24,000. All right. So he'll make a profit of $4,000. Okay. So if you close the position, right? So this margin use is going to be added back to your account value. Okay. Plus your profit and loss. Okay. Which I'll show you the calculation in the next page. Okay. So this lady here still hasn't closed the position. She still hold it Friday because now she's still losing money and she do not want to close the position, right? So her loss now has actually gone to 4,000, increased to $4,000. Okay, and the margin needed is again 10% of the value of the share traded at the time, so it's 2,400 ringgit. Okay, so the guy already closed the position at the end of Friday. Remember the guy made $4,000, right? So initially he has $10,000 and he made $4,000. So the account will be $14,000 minus the financing charges. Okay. Now bear in mind that the calculation here does not include commission. Okay, there's a brokerage when you buy and when you sell, when you enter and when you exit. Okay, so this one does not take that into account because the brokerage is only is charged when you make a trade, right? Whether to buy or sell. Okay, so at the end of Friday, right, the price went up to 250, higher right now. Okay, so now this lady here has incurred an open loss of 5,000 ringgit, $5,000. Okay, still lower than the account value, so she does not really need to top up lah. Okay, if it's above the account value plus the margin, which is $10,000, so that means if your profit or if your losses is more than $10,000 for this lady, for example, anything that's above $10,000, you have to top it up. All right, because you need that as a margin. Now, if not, then your position can be closed. All right. So open position here, again, he'll be charged another overnight financing of $3.80. And now she is on Friday and the market is going to be closed for 2 days until it opens again on Monday. All right. So now let's say we're on Monday and let's say the guy decided not to do anything, not making any trade. So the account will still have 13,993, which is close to $14,000. All right. And now this lady cannot tahan already. All right. She wants to close her position because now she already, if the price keep on getting higher, she's going to lose even more. She could probably lose that whole $10,000 that she put in. Okay, if the price went up $1 from the price that she bought, that means if the price goes to $3, she would have already lost $10,000, all the money in the account. All right. So she decided to close and let's say take a $6,000 loss. So he closed the position at 260. Okay, at that on Monday itself. So she decided not to hold overnight. So you don't have any overnight financing. All right. So the closed position at the time was the value of the stock is 26,000. Remember, the initial investment was $20,000. So because you are in a short position, then you have a negative or a loss of $6,000. All right. So when it puts back to your account, this is what she has left in the account. Okay, 3,993 is actually $4,000 minus the financing cost that she hold for the past, including the Saturday and Sunday, about 5 days. All right. So that's how basically it works. But of course, this is just a simple way of putting the accounts. Just sharing with you guys, and I think later Anne will also show you the trading platform that you'll be using, and you can see where the margins are. How much margin you have, and it's all real time. All right, it's all real time. So this is how it works, and of course, it depends on your position, whether you want to go long or you want to go short, and that's where you're able to profit from the market with an additional boost, right? Because you're trading on leverage. Okay, so if you do a calculation, for example, all right, that guy, remember, he made a $2,000 profit. Okay, and the share price, okay, actually from $2 to 240, right? That means you make a 40 cents profit. How much is that in percentage? If you were to buy traditionally, right, $2,000 out of $10,000 that he buy, let's say buy a stock. So trading the underlying means you are buying that shares in the exchange, not CFDs. All right. So because he buys 5,000 shares because the trading value is $10,000, right? So if he makes $2,000, that's 20% of that $10,000. If the price goes up from $2 to 2.40. And of course, in trading the underlying, if that person allowed to go short in the exchange, because in the US market you can actually go short, right? Malaysian is regulated short selling lah. So this lady here will have incurred also a 30% here if the price goes down to 260 lah. All right, I'll make some adjustments over here. Now, if you look at the difference here on the guy itself, so what happens if he trades a CFD, right? So 240 minus $2, remember, he makes a $4,000 profit. Okay, so for the $4,000 from the $10,000 is actually 40%. So it's 2 times more. Okay, if you calculate it from your capital that you put in, all right, if you calculate from the capital you put in, which is $10,000. But if you calculate from the margin required to trade, because the margin is only $2,000. Remember, it's 10% of the $20,000. Okay, so if you calculate that way, then you're actually making, $4,000 profit from the $2,000 margin. That's actually 100% return. Okay, so it can be quite substantial. Okay, so this is where you need to know how to manage the risk, right? This is where you need to know how to manage your position size, especially when you're trading the CFDs, because you need to know the risk involved, especially the volatility of the stock that you're trading, because it's calculated on a daily basis. All right. So how do you start trading CFD? Of course, number one, make sure you have a trading plan if you know what to do. Of course, the first or the step number 0 is to open an account first. There is a requirement to open a CFD account. Okay, maybe later Anne can explain to you guys. You suppose you have to be a sophisticated investor. All right. So later maybe Anne can explain to you what's a sophisticated investor all about. Okay, so once you open an account, then of course you need to have a trading plan, right? Or an investment strategy. So at least you know when to get in and when to get out in a trade. Okay. And remember, you can actually go long or you can go short. Okay, number 2 is you manage your money well. Okay, you trade according to what you can afford and you don't overtrade. Again, this is all about money management. You need to have the discipline to follow your trading plan. You do not want your account to go bust. All right, you need to know what to do basically. Okay, and then you also have to be aware of the risk that of the price moving against you. If the price move together or the direction that you anticipate, then that's not a problem. You'll be making money. Okay, the risk is basically when the price goes opposite direction where you're expecting. All right, so these are just basically a guideline before you even want to start trading at CFD. And you know what? I remember I mentioned to you guys that this is the first session. We actually have a second session which we're going to do on a Zoom platform, and therefore it requires you to register. Okay, so it's not going to be online like on Facebook, on YouTube, because this is where we're going to go into more details on trading CFDs. And this is only for those who are really interested to take the next step to go into trading CFDs. Okay, for the second part, because if you think that this is not for you, then there's no point for you to go to the second part. Okay, the second part will basically take place next. Let me see. I think I've forgotten the dates, but it's going to be on the 13th of October. All right, on the 13th of October, and this is only by registration only. So my colleague will put that link down there for you to register for that 13th of October. We will send you an invitation few days. Of course, we will send you a confirmation earlier, but few days before, we will give you a reminder for the session on the 13th of October. Okay, we'll also send you the details on how you can actually get online. All right, and if you also know, and the slides today, that I presented here can also be downloaded once you register for the 13th of October. All right, because if you do not want to register on the 13th of October, simply means that you're not interested, right, on CFDs. Then it's no point getting the slides. All right, so once you fill up the form, which my colleague is going to put down there, then you get the slides for today and also register for the session on the 13th of October. Okay, so that's my presentation for today. If you have any questions, all right, then you can just type it down. Like Clayton, for example, is asking, how do we allocate the buffer? Any guidelines? Now the buffer really depends on your risk appetite lah. There's no guideline. All right. Whatever money that you put in, for example, you put in $1,000 in your account, you can still trade if, let's say, the margin required to trade that particular instrument is only $100. You can still do that, right? Or the margin required is only $200, as long as it's not more than $1,000. Okay, but like I said, if you have $1,000, you don't use that whole $1,000 as the margin to trade, let's say, $10,000 worth of stocks lah. All right, then you get margin calls. Okay, so again, all of this on this is where I'm going to also share with you guys on the 13th of October. We're going to talk about how you manage your risk, what kind of tools you can use to trade CFDs, and also how to develop a holistic trading strategy, which involves a trading plan and money management as well. All right, because these are the two major components when you buy or sell, and also the position size, how much you want to buy and sell. Okay, that comes to money management. Okay, I hope I answered that question, Clayton. Okay, if you have an additional question or any of you have any additional questions, just post in the comment section. All right. So what I'm going to do now is I'm going to invite Anne in, and she will give you more details. And if you guys have any more detailed questions on CFDs or what 𝐀𝐸𝐿𝐲 is offering, you can ask this question to Anne as well. Okay, because Anne is basically from 𝐀𝐸𝐿𝐲 futures. All right. So so everyone, please welcome Anne. Hi, Anne.
Thank you so much, Manny. Yes, I can hear you. Thank you so much for your detailed sharing on the product. I'm sure our audience now understand better about this new CFD product, which had just been available in Malaysia not too long ago. So good evening, everyone. My name is Anne Wong, and I'm from 𝐀𝐸𝐿𝐲 futures. So yeah, I don't want to take up too much of your time, so I'll just quickly show you on how you can get the important information about CFD on our website. So just let me share my screen first.
So if any one of you have any questions, you can just type it down, right? We will try to answer your questions once and finish a presentation. Okay, there's a question from Tash.
Do I have to share the screen one at a time? I cannot share a few screens, right? Okay, now just let me
you share one at a time.
Okay. All right, so just let me share this iTrade website first. Are you able to see the website?
Yes.
Okay, all right. So from this iTrade website, www.iTradeCIMB.com.my, you can click on products and services, click on contracts for difference, and over here, you'll be able to see a lot of information about CFD under all these tabs over here. Under the Education and Guides tab, you'll be able to see the Introduction to CFD slides, the Viewpoint User Guide, Viewpoint Contingent Order Guides, and all the videos that show us on how to use the CFD trading platform. So under this, our products tab, these are the list of shares that we currently offer from Malaysia, Singapore, Hong Kong, US, and Australian market. If you scroll down further, you'll be able to see the cash index CFD, which are available over here. Okay, so this Bursa Malaysia's products are just newly added because we think most of you are actually prefer to trade the local markets as you are more familiar with the local shares. So these are all just newly added. And in total, we have about 3,000 over counters available for you to trade. And if there's any counters that you wish to trade but it's not listed in this list, you can let us know and we will review and see whether they meet the requirement set by the Securities Commission. Okay, so yeah, to open a CFD account, you can go to this Opening an Account tab and you can submit the CFD individual account application form together with all the relevant market data forms over here. So yeah, I see a question earlier from KP Chin, right? Can I use existing CFD account for local counters or need to have a separate CFD account? So, okay, you can actually use back your existing account if you have an existing CFD account with us, but you will need to submit this Bursa Malaysia Market Data Service Agreement form. Yeah, just need to submit this and your account will be enabled to trade the local counters. Okay, so yeah, like what Benny mentioned earlier, one point to note that is CFD currently can only be traded by sophisticated investor, which is any person who falls within the categories of investors set out in Part 1 of Schedule 6 and 7 of the Capital Markets and Services Act. So if you click on this sophisticated investor link, you would be able to see the category. Just one moment. So I'll share the other link, just one moment, yeah. Okay, yeah. So when you click on the link just now, you'll be able to see the categories of sophisticated investor as set out in the CMSA. So as an individual, you will be considered as a sophisticated investor if you have a total net personal asset or joint asset with your spouse that exceed 3 million ringgit or is equivalent in foreign currencies, excluding the value of your primary residence, or if you have a gross annual income exceeding 300,000 ringgit, in the past 12 months, or if jointly with your spouse exceeding 400,000 ringgit, or if you have a total net personal investment portfolio or total net joint investment portfolio with your spouse in any capital market products that exceed 1 million ringgit or is equivalent in foreign currency. Yeah, so if you meet this criteria, then you would be considered as a sophisticated investor and you can actually trade CFD in Malaysia.
So I guess Tash is asking, when will CFD be offered to the mass market? Have any idea?
We are engaging the regulators for this already. Yeah, we are hoping that they can actually open it to the mass market sooner also. Yeah. Okay, so let me share back that screen of our website. Okay, so from our website also, under our products tab, you can scroll to the bottom and you'll be able to see our commission, financing, and market data charges. So when you click on this, are you able to see the commission charges schedule, Benny? Or do I need to share?
You have to share the other one.
I have to stop sharing and share the other one, huh? Okay.
Yeah.
Okay, yeah, so this is the commission and charges. You can see that this is the respective commission rates for the respective market and the minimum commission rate. Financing fees is applicable if you hold your position overnight, as what Benny explained earlier. So this rate for the foreign shares, it would be 3.75% plus base rate for long position, and 3.75% minus base rate for a short position, whereby for Malaysia shares, it will be 5.75% for long position and 4% for short position. Okay, so for the market data fees, the delay data is free by default. And if you wish to subscribe to the live market data, this is the applicable fees. It's minimal, like for the US market, it's only $3.30 per month. Okay. All right, so we are currently having a CFD trading campaign to reward all our clients with attractive and guaranteed prizes. Let me just, you can see the slides, right? The campaign slide, Benny?
Yeah, you can do a presentation mode so it's bigger.
Yeah, okay.
Yeah.
All right, is this better?
Yes.
Yeah, okay. So yeah, we reward our clients with all these attractive and guaranteed prizes when your total brokerage hit the specific tier. So for the top 2 tiers of the campaign, we'll be giving you a Rolex watch. So we want you to choose the watch yourself. So we are giving Rolex vouchers instead so that you can go to the shop and choose the watch yourself. Yeah. So it's very attractive prices, and this campaign ends on the 31st of December. So yeah, I hope that you all can hurry up and start trading CFD with us. So Earlier, Benny has also shown us a detailed computation on how CFD calculations work. So over here, I'll just show a simple comparison between CFD and share trading. So in this example, over here, you buy 100 Apple CFD at $126. Over here, you buy 100 Apple shares at $126. The initial capital for CFD would be $1,260 based on 10% margin requirement, whereby for the traditional shares, you will need to pay the full capital, which is $12,600. So if the price increased by $10, to $136, the gross profit for both transactions would be $1,000. Okay, the value is the same, but the return on initial capital for CFD is much higher at 79% as compared to only 7.9% for the traditional share. So the reason of this is because of the leverage factor that for CFD, you only need to pay a fraction of the contract value, which is the margin of 10%. Okay, so remember in the first place, your capital to do this CFD trade is only $1,260 and your profit that you can make out of it is $1,000 in this example. So of course, similarly, if the price goes against you by $10 and falls to $116, the loss would be $1,000 for both transactions, but the loss on initial capital in terms of percentage would be also much higher for CFD as compared to traditional shares. Okay. Yeah, so we need to emphasize that the risk of loss in CFD trading can be substantial, and you may lose more than your initial investment. I know it sounds scary, and you always hear people say that in futures or CFD trading, you can lose everything. So while it is true that you can lose all your initial capital, that's because your initial capital is only 10% of the full contract value, which in this case, it is only $1,260. So when the market moves 10% against you, you would have lost all of that initial capital. Yeah, but if you compare to traditional share, the value of the loss is actually the same. Yeah. For trading in CFD, you must maintain the margin required at all time when your position is open. So we usually advise clients to bank in more than what is required to provide some buffer for market fluctuations, like what Benny advised us earlier as well. So yeah, when your account balance falls below the margin required, your account will go into a margin call, whereby you need to top up or close some positions to rectify the margin call. The margin requirements for each counter varies, and you can see the margin rate for each counters from our trading platform. So leverage trading can be risky, but you can actually manage the risk yourself. If you think that 10% loss is too much, you can always set your stop loss at any level that you are more comfortable with for each trade. Okay, I'll show you on how you can set stop loss later on. CFD is an over-the-counter contract, so it means that its transactions are not traded on a regulated exchange. So when you buy or sell a CFD, the contract is issued by a CFD provider, which is your counterparty. If you deal with a not so reputable counterparty, there could be a risk that the CFD provider fails to fulfill its obligations to you in the event of insolvency. So it is very important for you to choose a trusted counterparty. Yeah. So in CGS-CIMB futures, we abide by the Securities Commission guidelines in the offering of CFD. We must ensure that our clients' assets for CFD trades are segregated from our own assets. So this means that even in the case of insolvency, touch wood that it will not happen, yeah, your money in the segregated account would be well protected. So you can be assured that your funds deposited with us is secure, and fund security is definitely a very important consideration when you choose your counterparty. Yeah. Also, as mentioned earlier by Benny, as a CFD investor, you are not the actual owner of the underlying instrument itself and do not have any rights such as voting rights over the underlying instrument. Yeah, but all corporate actions such as dividends, bonus issue, rights issues that are applied to the underlying security will be reflected in the value of your CFD account. Okay, so before we end, I'll just quickly show you how we can place an order in our trading platform.
Yeah. And there's a question from 𝐀𝐦𝐻𝐥𝐢𝐟𝐲. Is there a difference trading CFD in Singapore and Malaysia? I'm not sure whether he meant by trading in Singapore or in Malaysia, or trading here, but you can trade both markets. So maybe 𝐀𝐻𝐥𝐻𝐥𝐢𝐟𝐲, you can answer that. But is there any difference if, let's say, you're trading from here, open one account, trading Malaysian CFDs and Singapore stock
Actually,
CFDs?
if you open an account with us, you can trade Singapore counters, and you can also trade Malaysia's counters and all the other markets that we have. But of course, if you trade with Singapore, then you'll be facing Singapore. And right now in Malaysia, those are regulated under Securities Commissions. It's us, and there's actually only 2 brokers in Malaysia which is regulated under Securities Commission right now. Yeah.
Okay,
Also,
thank you.
if you compare to Singapore, I'm not sure right now whether do they have any trading campaign. So our campaign right now is quite attractive, I would say. So yeah, do support us.
This is only Malaysia, like if it's just CIMB in Singapore, they don't have this promotion, this
Yeah,
campaign.
this campaign is only for Malaysia.
Okay.
Yeah. Okay, so this is the IRES Viewpoint trading platform. It's a web-based platform which you can use it anywhere. It works on all browsers, but the recommended browser is Google Chrome. So everybody would use the trading platform differently, and you can customize it according to your own preference. This is one example of how you can customize your screen. Over here, you can create your own watch list to show the list of counters that you want to monitor. Over here, you can have your order pad to show the orders that you have keyed in. And over here, you can have your portfolio to show your account balance and also the open position. I need to adjust a bit. Yeah. So over here, you'll be able to see your portfolio, which is your account balance, your free equities, the initial margin required, and the open positions that you are holding. Okay, so let's say we take this CIMB as an example. You click on the ask price to bring up the order ticket. Over here, you'll be able to see the information of the counter. Like for this counter, the lot size is 100 unit, and the initial margin required for this counter is 10%. Okay, so this is where you can place your order. Let's say if you want to buy 1,000 unit of CIMB CFD, okay, over here. So you key in 1,000 unit, okay, and let's say you want to put in the price at 480, okay, you want to buy 1,000 at 480, so you key in 480 over here. So you can see that this transaction, the total value would be 4,800 ringgit, which is 1,000 multiplied by 480. This is the total value, but because of the 10% margin requirement, the initial margin required is only 480 ringgit. So you must make sure that your balance have a sufficient margin, which is above this 480 ringgit in order for your order to go through. Okay, so after you put in this order, you can straight away submit this order by clicking here, place buy order, or at the same time, you can attach a take profit and cut loss order, stop loss order to this order over here. So let's say if I want to put a stop loss order over here, I click on protect against losses, click on regular. Over here, I change to price. So when you cut loss, it would be when the market falls, okay? So let's say if the market falls to 450, okay, that's where you want to cut your loss. So when 450 price is triggered, your order over here will go in, which is sell 1,000. You can select limit price or market price. So let's say if I put limit price at 450, okay? So if 450 is triggered, this order will go in. And you can see here the estimated loss would be around 300 ringgit if this order is filled. So scroll down further, you can click on protect your profit to set your take profit order. Click on regular, click on price. Okay, so when you take profit, it is when the price goes up, right? Because you long in the first place at 480. So over here, let's say when the price reach 550, okay, that's where you want the trigger price to be. And when this 550 is triggered, you want to sell 1,000 unit. Over here, you can select limit or market. Okay, limit, you set a price, or market, let's say if it is, since it's a take profit order, right, I'm happy with any price, then I can just put market over here. So that means that when this 550 price is triggered, then your order to sell 1,000 to the market price will go into the market. Okay, so the estimated profit if this order is filled would be 700 ringgit. Okay, so there you have your stop loss and take profit order in place, and these orders will only be activated when the first order over here is done. When the first order is not done by the end of the day, these two orders will expire together with the first order. Okay, and this stop loss order and take profit order is one cancel another. So when this stop loss order is triggered, this take profit order will automatically be cancelled. Or if this take profit order is triggered, this stop loss order will automatically be cancelled. So they are considered contingent orders, and all contingent orders will automatically be good till cancel until it is triggered or cancelled. Once triggered, it will be good for the day, and if the trigger order is still not filled by the end of the trading day, it will be purged out. Okay, so before you submit the order, always check on the summary on the left of the order ticket to ensure that everything is correct before you place the order. So let's say if I click buy, place buy order now to place this order in, okay? Then you will be able to see your order in the order pad over here. But because right now the market is closed, so you'll be seeing an invalid order. Okay, so in order for you to amend or cancel an order, you can click on these three dots over here. It's the inline actions menu. When you click on it, you'll be able to amend or cancel your order. Okay. So due to time constraint, I'm showing just a simple example on how you can place an order via our iRest trading platform. For the detailed guides and videos on how to use the trading platform, you can get them from our iTrade website under the Education and Guides tab. Okay. Just let me share another screen.
Yeah, I must say that the trading platform is very, very impressive when I was using it. And I just, sometimes you just wish that the local brokers actually have this kind of platform as well. We have the contingency orders. You have, the whole is quite complete. You can even put your whole trading plan into that ordering system, right? Into the contingency plan and all that. So it's very impressive. It's something which you guys have to really, really, really try if you wanna see how impressive it is.
Yeah, and you will be able to see exactly what is the margin required and what is the estimated profit or loss if your stop loss order or take profit order is triggered. So those are very useful information.
Yeah, and I love the fact that you have that trading information, that summary, and it's basically explained in very simple to understand layman term. Then you know what you're getting into if you place those orders, right? So it's that's very good actually.
Yeah, agree. Okay, yeah, so that's all I have for today. Please take a look at our disclaimers. So this presentation has been prepared for your general information only as an introductory explanation about the product, and it should not be used or relied on as a recommendation or basis for making any specific investment, business, or commercial decision. Okay, so it is very important that you understand the key risks of CFDs and consider whether CFD is suitable for you. Yeah, if you think that, if you consider yourself to be a conservative, risk-averse investor, or if your investment objective is preservation of capital, then CFD may not be suitable for you. Yeah. So yeah, please take a photo of our contact details and feel free to call us or email us if you have any questions at any time. Yeah, that's all I have for today. And thank you very much for your time. And I hope you all find these sessions beneficial to you all.
Okay, thank you, Anne, for your presentation. And guys, remember just to remind you guys, we have another session on the 13th of October where we're going to have actually a closed session using Zoom. So it's not going to be live like what we are having right now. We're going to have a closed session with you guys who are interested to pursue this further. We're going to have a second session, and that's where we'll be sharing more about your money management, how you should fund, how should trade those CFDs, and also how you manage risk. Because I think that one of the most important thing in trading CFD is you need to know how to manage risk if you have not invested in futures or CFDs before. All right, so this is what we're going to explain to you guys as well. So the link is pinned there. is already pinned on the comment section. You can just click on that link so that you can register. And also to get the slides is the same link as well. All right, so just click and we will register for you guys, and we'll remind you again come 13th of October. We remind you about the session. It's going to be at 8 p.m. also. All right, it's going to be at 8 p.m. So just click on the link if you want to attend the next session on the 13th of October. Okay, before we end, there are a few questions here. Okay, DRSR 79 asking what's the brokerage to trade CFD for Bursa Malaysia shares?
Okay, so I have earlier shared the screen on the brokerage. Maybe just let me share that again.
Yeah, maybe it's a little bit too small, can't see lah.
Yeah, let me share that again. One moment. Okay, yeah, so for Bursa Malaysia shares, this would be the brokerage is 0.35% for Malaysia shares, and the minimum commission is 40 ringgit. Whereby if you wish to hold a position overnight, then the financing fees would be 5.75% for long position and 4% for short position.
Yeah. So CIMB futures is very transparent. You go to the website link, everything is there. All right, there's nothing to hide. Okay, now let me see the CFD charges for CFD. Is it the same in Malaysia and Singapore? This is by SP Ting.
Yeah, I believe they are the same.
Okay. Okay, this is I think question for me. Can ET portfolio capture CFD trades? No, not at the moment. I mean, we not at the moment because it's a different system altogether. So I mean, this could be interesting.
Sorry.
Yeah.
Yeah, I just want to add on to the earlier question just now, right? Comparing between Singapore and Malaysia. So one thing about the offering of the Bursa CFD is when you trade with us for Malaysia, the settlement would be in ringgit Malaysia. If you trade with Singapore, their settlement would be in US dollar for Malaysia shares. So there's one difference between Singapore and Malaysia for Bursa shares.
All right. Okay. Looks like there's no other questions. Let me see.
Yeah, Benny, I think there's one more question from Muhammad Lezam. Is the deposit only for cash or can you share collateral? So
the earlier one.
Yeah, right now we only accept cash for your deposit. Yes.
Yep. So give you another guys 2 minutes to ask your questions. If not, we're going to end tonight's presentation. Yeah, thank you guys for joining us tonight. Thanks, Tash. Boring trader. Wow, I thought traders are not boring. So we have a we have a participant here called boring trader. I just wanna share with you. Okay. Well, if there's no question, thank you so much. I'm looking forward to see you guys again on the 13th who are interested. Again, click on the link to register, right? It's not going to be online, so you have to register to attend the second session, right? So with that,
we hope to see you on the 13th of October.
Yeah, and Anne will be there as well. So she will also be, guiding you guys if any questions relating to CIMB offerings for CFDs. All right.
Actually, on the 13th, it would be another of my colleague, why she would be the one joining on the 13th. Yeah. Okay.
All right. Awesome. So thank you so much, Anne, for this session, for this insight as well. And thank you everyone for joining us tonight. Till then, thank you so much, everyone, and have a good night and stay safe.
Thank you, Benny.